Good morning. We will pay attention to inventory loss and why the inventory loss increased cost of sales. When we use the periodic inventory system, you will open a separate ledger account for each expense that is incurred when goods are purchased. For example, you will have a purchases account, you will have a carriage on purchases account, and you will have an import duties account. So all the expenses that you pay when you buy the goods, the purchase price, carriage to get the goods to your premises, import duties that you have to pay if you import goods from another country, will all form part of the cost price of the goods. The value of inventory on hand can only be determined by means of an inventory count. So in the periodic system, you don't use your inventory account during the year. Therefore, you can't go and look in your inventory account what is the closing balance. If you want to know how much stock you've got available, you have to do a physical inventory count. You cannot determine inventory shortages or losses in the periodic system except when you have the gross profit percentage. Then you will use the gross profit percentage to calculate the cost of sales because the sales is available, and then you can do this calculation to determine what is your closing inventory. No entry will be recorded for an inventory shortage as it will be absorbed by the cost of sales due to the lower closing inventory. So I want to explain to you how this works. So according to the inventory count, there's 16,000 Rand inventory at the end of the year. So I will take the opening inventory plus my purchases, carriage on purchases, import duties, and I will deduct the 16,000 Rand closing inventory. And that will give me a cost of sales figure of 66,000 Rand. If we look at the second example, according to the physical inventory count, the closing inventory is 12,000. So the 14,063 and 5 that we had there will remain the same. But now instead of having a closing inventory of 16,000, we have a closing inventory according to the inventory count of 12,000. What happens now? Our inventory decreased from 16 to 12. What happened to our cost of sales? It increased from 66 to 70. That's why we say if there's an inventory loss, we don't have to record it in the periodic inventory system because it will automatically be absorbed by the cost of sales. So if my closing inventory is lower, my cost of sales will automatically be higher. What did we learn today? The cost price of inventory includes the purchase price, carriage on purchases, and import duties. The closing inventory can only be determined with an inventory count, and although you don't complete any entries for the inventory loss, the cost of sales increased from 66 to 70 because the inventory decreased from 16 to 12,000.